What's up, everyone? All right, so in today's episode, I'm going to give you my watch list for Monday morning and the game plan for the week ahead. Now, whenever I start an episode like this, I like to take a moment to take a look back at the last few trading sessions because it kind of gives us a little bit of context. Are we in a hot market? Are we in a cold market? So, first of all, I have to say, I'm blown away by the momentum we've seen in these last few trading sessions. We've had kind of a combination of different types of stocks that have been squeezing. It's either been biotech stocks or Chinese stocks. So Chinese small caps have kind of come back into play. And then the biotechs, I mean, those are always around. It's just sort of we go through cycles where we have biotechs that are putting out great news, we get some great action, and then we have periods where we're just not seeing really good headlines from biotechs. And so traders are a little, I don't know, just sort of less interested. One of the things that you have to realize is that traders are very sensitive to what has been happening just in the last few sessions. So for instance, if the last stock that made a big move was a Chinese stock, then traders are naturally looking for the next Chinese stock that might make another move. Or if the last stock was a biotech, they're looking for the next biotech stock. So we get kind of fixated on, this was the profile of the last stock that made the big move. So that's what I should be looking for, moving forward. But this week was kind of interesting because we jumped a little bit from Chinese stocks one day to biotech stocks the next day, and then back to Chinese stocks. So it's sort of a little inconsistent there. But at the same time, that speaks to a little bit of a different profile that we've got going on right now. So we're going to identify the profile of big winners from the past week. So this is going to help us kind of get focused on what we should be looking at in the week ahead. And I also like to take a moment just to kind of look back on my own metrics because something that was important to me when I was learning how to trade is I really wanted to find someone that I could learn from. And the problem was, while there were some people out there who were talking about their trades, they weren't showing their track record in total. So they were just showing, an occasional huge winner. And it was like, well, all right, but do you win on average, or is that just like an outlier? So I like to kind of set the stage here and just show you. These are my metrics just for the month of January. Last week was by far best week of the month. I'm just going to refresh this for something. So finished last week, 165,000, just over, which was really phenomenal because we had the market holiday on Monday. And these are my metrics for the month of January right now. So sitting at 285 on the month. And my accuracy for the month has been above average. I'm at 76% accuracy right now. Trades 3 minutes long. So jumping in, jumping out, having to be pretty quick. Yeah, there's been some longer hold times, but for the most part, the trade's been pretty quick. Average daily gain, almost 20,000, which is fantastic. I mean, that would have me on track for like a $4 or $5 million year. And it's not out of the realm of possible, but I would just need to sustain this level, through the whole year. So then price and volume, just sort of pretty much typical as you would expect, generally doing well on stocks under $20, not as well on stocks under $2. So the cheaper stocks I don't do as well on. The more expensive stocks are a little tricky for me. And 2 and 5 has been a real sweet spot. But all of this has been, pretty solid. So that just kind of gives you like sort of big picture. And so for tomorrow, Monday morning, those of you guys who have been watching these morning shows or these daily recaps that I do every day or my weekly game plan episode, if you'd like to watch me while I'm actually trading live, you're welcome to do that. There's a link that I'll pin to the top of the comments, and it'll put it in the description for a 2-week trial at Warrior Trading. So if you do that 2-week trial, on that page for getting started, you'll see 2 options. One is take a free class, which since you've already been watching a lot of my episodes here on YouTube, you probably have already gotten a sense of the way I teach. And so then the next step for those of you guys that really want to learn a little bit more is to watch in action. And so to check out the 2-week trial. And it's $20. Now, the reason it's not free is because during your 2-week trial, you get access to real-time market data. And so we have to pay for the market data for each person that has that access. So that means you're going to have real-time scanners, real-time charts, the news feed, and of course my chat room and my broadcast. Okay, so now let's look just at one stock from Friday, DXF. Holy smokes, does that say 32,000% gain? So this is another Chinese stock, and this one went from $8 all the way up to $48 a share. However, one of the problems with it is that it did it on very, very light volume. And when you have very light volume moves, you have very large spreads, especially on a higher price stock like this, which makes it almost untradeable. I mean, you really can't manage your risk on it in any serious way. So this isn't something that I traded, but it does speak to the fact that we're still seeing this momentum on Chinese names. So it's something that we should certainly pay attention to. And as I mentioned in one of my episodes last week, trading Chinese stocks is not without risk. The problem is that some of these Chinese stocks, what we see is that they'll have this, kind of gradual climb where they just start gaining momentum and they start actually going parabolic, and then they dump. And on the day that they dump, it's unbelievable because they just start selling and they do not recover. So this is an IPO, so it hasn't really had the true dump yet. Yes, it's pulled back, which is not surprising considering its volatility. But when I'm talking about a dump, I'm talking about a stock that drops like 90% in one day. Let's see if I can find a slide of it. I have some there. Yeah, here we go. So this is what it looks like when these do these drops. It's just like from $2 all the way down to 34 cents. So when they start dropping like that, you want to be really careful about thinking you can buy the dip, because these don't dip. I mean, they don't bounce. They just keep going lower and lower and lower. So that's the thing you've got to be really careful of. On the front side, they can be fun, but when they finally turn around, it could be pretty bad. So just be aware of of that risk with these Chinese stocks. Okay, so it's not going to stop me from trading it. It's just something I'm going to be aware of. Now, to be honest, all stocks carry risk. So when we're looking at the biotech stocks, what's our primary risk? Secondary offering, right? Why is that? Well, most of the biotech pharmaceutical companies that are in the clinical trial phase, doing research and development, they run their business at a loss. They're not making any money until they have a drug that they produce that gets cleared through trials, gets FDA approval, and then goes onto the market. So they spend years losing money until they make that, they have that moment. And so who's investing in this company? Well, typically it's, philanthropists, people that believe in the cause, and they're willing to invest in the company. It is publicly traded, which makes it easy to invest in the company. And, they're hopeful that the company is able to develop this cure. But if not, this is part of the deal with companies that spend a lot of money and resources on this type of stuff. It doesn't always work. So the risk with these biotech pharmaceutical companies is that because they're tight on cash, they need to raise money. And so some of them will just sell shares on the open market to raise that money rather than find a more savvy investor. And so that's the risk with biotech stocks, that they go up and then boom, you get the offering. And that's what we had happen on Friday. So ALUR went up 500%. This was unbelievable. I mean, it was amazing. And I had a huge day on Friday. So big move. I mean, this was awesome. 8 all the way up to 11, pullback all the way up to 18, pullback all the way up to 20. And then right here at 9:30, they put out news at 9:30, opening bell, of a $7 million secondary offering. And the price dropped, right? So would that have happened with a Chinese stock? Probably not as likely to see the secondary offering, certainly not in a recent IPO. But they happen, but the risk is more of insiders liquidating, where people are just dumping it. So that's just a different risk. So, risk, but in just to help you better understand it. Okay, so then Friday we also had NVNI. So this was another stock that put in a pretty big move and held up relatively well on Friday at 446. So this is something that may be worth watching for traders early tomorrow morning. My concerns on it would be that you're sort of on the backside of this big move, although the volume was higher yesterday or Friday than it was on these days here. So kind of positioned a little bit funny there. I usually prefer to trade in this range rather than trade on the backside here, but obviously, put in a big move. Now, this is a stock that made the majority of its move during regular trading hours. So it's a SaaS, software as a service company in Latin America. Um, Companies in the Grand Cayman Islands. That's not uncommon. A lot of companies do register there because of the favorable tax stuff and everything else. So that doesn't make it sketchy. It's just that's common. A lot of hedge funds and stuff are in BVI, British Virgin Islands or Cayman Islands. So that's fine. But yeah, I think so. To me, most likely this is going to have. I mean, it's the volume was 367 million shares on Friday. That's crazy volume. So it had a lot of volume, but I don't think it's likely that it has more volume than that tomorrow. I think it has less volume, most likely. So I don't think I like to trade the higher volume days, and I just don't think Monday's going to give it to us. But I could be wrong. So the levels I would watch, focusing just strictly on the levels, would be first over 489 right there. I would call that a pivot because see how it's been sort of stair-stepping down? So it didn't make a new low right here, right? So that kind of was significant. It stepped, came up, didn't make a new low, but sort of stopped here and then came back up. So then if it breaks this level, then we're starting to actually step back up. So that's where we're kind of looking at these patterns where, this is sort of stair-stepping down. So you would expect it to kind of keep going like this. But when it breaks that pattern, then all of a sudden it's like, well, wait a second. If we break this level, now we're stair-stepping up, right? So breaking over 489 would be important, and then breaking over 580 would be important. So if those levels break early pre-market, then you could just get a spike at 4 a.m. and then it just sort of slowly fades, which would only be helpful for 4 a.m. traders, but I'm not one of them. So that's NVNI from Friday. ALUR, that one's out of play because of the offering, unfortunately. EVAX, this one, it pulled back a decent amount. It ended up being red on the daily chart. Someone was asking, how is that possible? It's up that much and it's red. Well, we color the candles based on the open and the close of regular trading hours. That's the default. Now, that may change at some point because more and more we're seeing trading occurring in the pre-market session, but daily charts only include, by default, regular trading hours. So anyways, yes, based on including 4 a.m. trading, it went from here, open down here, and closed right here. So it would be a green candle, but still has this larger topping tail. So I don't know if that one's going to work. I think that the momentum has shifted away from it. So I think what's most likely to happen is we're going to be in a little bit of a hot potato market where whatever is like today squeezing is what people are going to focus on, but you just don't want to be the last one holding this potato because then as people shift to the next one, you're holding something that's not hot anymore. And it's just sort of disconnects from the analogy because actually if it's hot, you would want to hold it because it doesn't burn you. But actually so forget about what I just said about the hot potato. It's like holding something else. I don't know. Doesn't matter. The point is, you don't want to just keep holding these after the sort of surge of momentum. So this is all about riding that wave of momentum and then getting away from it when it starts to cool off because it's not going to give us the volatility that we need. And so being quick to jump from stock to stock to stock. And it does feel a little chaotic at times to do that, I'll admit. I feel that way myself. And I felt that way a little bit. I don't know if it was Thursday or Friday. Now I can't remember. But there was a day where I was like, man, we're really jumping a lot. It's like, it was a little bit on Friday because we were going back and forth between ALUR and EVAX, but then no, Thursday as well because there was like two Chinese stocks. So it was like jumping, boom, 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 boom. And I find that to be a little difficult. You have to keep 2 level 2s up. You got to keep 2 charts up, maybe 3. And especially if they're a similar price, you can get confused. So just be thoughtful and recognize that it is a little harder when the market's like that. You could still do well, but it's going to require a little bit more experience to be able to move and jump from stock to stock as quickly as you might need to. Because what you don't want to do is just be like buying the top and then stopping out, and then buying the top and then stopping out, right? So it's like, okay, is this going to continue moving, or is this just a quick pop and then it's going to fade? And what I noticed a little bit on Friday and Thursday actually was that we had our both days, two primary stocks that were really obvious. On Thursday, it was Chinese stocks, and on Friday, it was biotechs. And then we had these sort of like distraction stocks that would pop up, but they wouldn't hold at all. RNAS was one of them. So RNAZ popped up a couple times on Friday, but it never did anything crazy. The real move on it was Thursday. And then it would sort of try to pop up and then it would reverse hard. Pop up, reverse hard. Pop up, reverse hard. Pop up, reverse hard. This was not the obvious stock. It was just sort of like, it didn't have news. It didn't have a reason to be going higher. And traders were jumping on it, but it wasn't pulling away. Nothing compared to ALUR, which was much stronger, and EVAX, which was also much stronger. So that's just something to kind of be careful of, that sometimes if you already have a stock that's really obvious and looks good, scanner alerts can be more of a distraction. When you don't have anything obvious, the leading gainers have failed, we don't have anything that looks good, then the scanner alerts are more helpful because they are potentially showing us the stock that could become the most obvious stock. But when you already have something that a lot of people are focused on, it usually makes more sense just to stay focused on that. So anyways, so my thought for Monday really is, well, I got to see when I sit down, what are people currently focused on? And is it Chinese? Is it biotech? Is it something else? What's the price range? What's the flow? And so that's going to be kind of my first order of business. Now, it's possible it's NVNI. It's possible it's one of these ones that we've already talked about or looked at from last week. But it's also possible that it's a completely fresh stock that we haven't even thought about or even heard of. Could be even a recent IPO. But it caught a bid, maybe put out some news, and traders jumped on it early, and it's already up 50%. And now as we come into 7 a.m., it's the stock people are focusing on. So I begin my live broadcast at 7 a.m. Well, usually like 5 minutes before 7 a.m. because 7 a.m. is when most retail traders are able to begin trading. That's just when most brokers like Thinkorswim come online. So I'll start at 10 to 7, my live broadcast. So if you're in the chat room, by the way, you click on the small cap room here. This is where you can join our chat rooms. This is your menu here. So you could join our chat rooms from here. And if I'm streaming, and I'll just for the heck of it, I'll just turn on my broadcast here. So I'm going to start my broadcast. And as soon as I start broadcasting, you see how it shows you this live button right there. So you click on that, and then my broadcast is going to come right through here. Right. So that's how you open the broadcast. So look for that. Now it does give you a ding and this little alert, but just so you know, this is how you actually open it. You'll see that it's live right here. You'll see that there's a live broadcast, but I know sometimes people are like, well, where do I go? So anyways, it's right there. So that's how you guys will get access to my stream tomorrow morning for those who do in the trial. When you sign up tonight for the 2-week trial or early tomorrow morning, whatever the case is, make sure you sign your market data agreements right away. And then you may have to log out and log back in, but then you'll have access to market data. So you of course need the market data in order to view the scanners and everything else. So I'm going to turn off my broadcast now. All right. So now it says it's off air. All right. So yeah, first order of business tomorrow morning is going to be to try to figure out which is the obvious stock, and then to start looking for pullbacks to jump on that momentum. Something that I'll also say just as a side note, I had a dream last night that I was trading in a park on my laptop, just one screen. And it was like all of a sudden 9:29 and 58 seconds. And I was like, oh my God, the bell's about to ring. And I don't have like anything loaded. I'm like trying to pull up, and kind of arrange. I don't usually trade on just one laptop screen. I'm trying to arrange everything. And I see a stock starting to move, and I felt very discombobulated. And when I woke up and then came over here to record this for you, I felt really grateful for, this, the freedom of all this space that I have here. I've got multiple monitors. I can kind of space things out. I can keep a couple stocks on watch. But I also thought for those of you guys that are working with a very confined workspace, to give yourself a little bit of a break and to remember that the traders who have been doing this for a while usually do have a couple more monitors. They're able to have a little bit more space. And that does give you an advantage to watch a couple more stocks. So you'll see here in the background, these charts right here, these are 2 stocks I keep on watch. It's a 1 minute, 5 minute daily chart and a 10-second. I don't really need the 10-second chart, to be honest, but I just leave it on there I don't know. I just leave it on there. So anyways, 3 or 4 charts, whatever, for one stock, and then 3 or 4 for the other stock. So I have 2 stocks here, and then I have 2 more here. So, and I usually keep the S&P 500 up here. So I have these 4 sort of side chart stocks, and then the one stock that I'm currently trading right here, and then my level 2 is all down here on this monitor right there. So that's trading with 4 monitors, and that for me works really well. It's a good workflow. When I'm on my traveling trading station, I only have 3 monitors, and that's fine too. The only difference is this monitor's gone. So I only have 2 stocks that are kind of on side chart, but that's usually fine because I don't usually use all 4. So I would say at a minimum 3 monitors is good if you can get there. I recently, just yesterday, Saturday, uploaded my Weeble episode. It was my honest review of using Weeble for a couple weeks and testing it out. Not a perfect company, but I gave my feedback on it. And someone said, Ross, it works really well on mobile. And although I did download the mobile app, and I agree, it's a nice app, trying to day trade on a mobile app would be, for me, just crazy. I've seen people doing it in little videos where they're like shifting between like the chart and the level 2. And that for me would be a deal breaker. So to trade the way I trade, I would say you really do need to come equipped, right? And it doesn't mean you need it on day 1 when you're learning, but you need to prepare that you'll need to have some space. And that's going to give you an advantage. So, I'll put an episode here at the end that you can check out on my computer, my trading station, and it'll give you some tips on how to set up monitors and the monitors I choose and everything else. And you might find that helpful. But make sure you give yourself a little bit of room. The extra $125 for a monitor is going to pay for itself. All right. So it's definitely worth it just to have that extra space. All right. So with that, let's get focused. Let's try to have an awesome start to the week. I would say right now, no doubt about it, where did I put my trader view window? So let's see. This was the window for the 2-week trial. Oh, trader view's over here. So here's my trader view metrics. What's this thing doing? Let me just refresh this. I don't know why anyways. So just last 4 trading sessions. So we're getting a little bit of a swing here, right? So that's what we like to see. And I'm hoping that this is the beginning of, a really nice move with a couple of really nice big green days. So I'm ready to step up to the plate. I'm ready to be aggressive and put the pedal to the metal. If we keep seeing these big moves, I'm going to lean in. It's absolutely the right thing to do, right? If there's ever a time to take risk and to be aggressive, it's on a day when we're seeing these big moves. So when we think back to 2020, 2021, when I had some of my record-breaking days, my biggest green day ever was $475,000. I was up over 500 on the day, gave back like 25 or whatever it was off the top. I think I might have hit 525. Doesn't matter though. So gave back a little off the top, finished at 475. But on that day, we had a stock that went up. Man, it was, I don't remember how many dollars a share it was. It went from, I don't know if I can even pull up the chart on it still. Let's see if I could get the chart. That was when we were having GameStop making its just a crazy move. So pull up, it was cost. Oh, but have they done a reverse split? I'm not sure if they have. I think I have my settings kind of funny on my chart, so it's not loading far back enough. I did that so it would load faster. Anyways, it doesn't really matter. So it went up to like $150 a share, $160 a share, something like that. And I remember on that one, I was adding high. I would add 2,000 shares, and then all of a sudden it would pop up like 5 points, and then I would take a little profit, it would pull back, I would add back, and it was just like, it was crazy. It just kept going and going and going. And we've started to see that on a few stocks in the last couple months. Some of the stocks I did well on, I remember a couple $200,000 days, a bunch of $100,000 days, where in order for me to get that kind of profit, I pretty much need a stock that can go up at least 10 points, $10 a share. So if we kind of break down the anatomy of, and I guess the profile, I didn't come back to this, but it's either Chinese or biotech. But what I really kind of need is, a stock to start kind of creeping higher, pull back a little bit, creep higher. And then we go into this parabolic move here. And this is where we go from like $5 a share to, 15 or 25, 5 to 15, 10 points. So 10,000 shares, 10 points is 100 grand, right? Now, of course, I'm adding, I'm selling, I'm adding, I'm selling. I'm actively trading it the whole way up. But for me to get 100 grand, I kind of need a 10-point move, usually pretty close to it. On Friday, I was up 80,000 on, and 40 of it was on ALUR. So how much did ALUR go up? It did go from 8 to 18. We got 10 points, and I was able to make 40,000 on it. The challenge with this one was it started a little more expensive to begin with, so I couldn't take as much size, and kind of bigger whips here, and I missed a couple of nice entries. So, basically you had this breakout here, which was right at 7 a.m., and then this one here, and then this one was not as good. So this was good, but we've definitely seen better. EVAX, was able to make some money on this, but this wasn't anything insane. This was only $3 a share, right? So the stocks that can give me the really big moves, or that can give me the really big profits are when we get, these like parabolic moves. I remember we had the stock ACY that went to 38. So it's like from $5 to $38. I made like 160,000 on that. RHE the same day made a huge move. I mean, that's really hot market stuff. So shorts, and it requires shorts to be adding. So shorts add as stocks go higher, expecting, they're adding at the extreme and it's going to reverse. And what I tend to do is I add as stocks go higher. I buy where they're selling. Now, it happens to be that way because for me, even though I'm buying high, I'm like looking at this and thinking that, but this has the potential to go higher. There's some people that only buy on dips and then they're just selling. I'll buy on dips, but then I'm also adding on the high day breaks up here, and I'm looking for that extension as it pulls away. And then once you start getting short covering, that's when all of a sudden you'll see it jump like 50 cents at a time. It goes from 7 to 750 to 8, 850 to 9, and then it jumps all the way to 10, and then it jumps all the way to 11, and then it jumps maybe to 13, to 17, and that's where you're going straight up. And for me, the way I feel is I may only catch a couple of moves like that each year, I suppose, but in a way, as long as I'm stepping up to the plate, pretty much every trade and looking for that possible opportunity, eventually I'm going to connect. Now, this isn't exactly swinging for home runs because I still take my profit when I have it. I have to be, really thoughtful about booking profit, scaling out, but I'm willing to get back in. And that's probably the biggest difference. Some people on maybe a trade like ALUR, my first trade on this I was in at $8.25 down here. And, then 15 minutes later or whatever it is, I'm in with like 10,000 shares up here at 14. Some people wouldn't do that. They'd be like, all right, I got my entry here at 825. I'm going to sell a little, sell a little, sell a little, sell a little, sell. So they're basically take their entry, and then from that point, they're just selling, and they refuse to add back because they're like, I can't possibly add back at 14 when I was just in at 8. And on the one hand, I understand that's logical. And on the other hand, I think, well, but this has no resistance until $24 or whatever the case is. So at this point, we could get another 10 points out of it. And if shorts got stubborn and are underwater and it keeps going higher, they're going to get forced to cover. And then all of a sudden, logic has kept you out of the price action. So I focus on the price action. And so when I see something moving quickly, that's when I get like really zoned in. Now, the hard thing for me is it's like a dog with a ball, so to speak, or chasing a squirrel. There's a little bit of a chase instinct. When I see something starting to pull away, I have a little instinct to chase it. Because if you think of the stock almost as like, prey, like you're trying to capture this profit, and you see it's moving, there's profit there. Now, you haven't gotten it yet. It went without you, but this is what you wanted. So as it starts to pull away, that draws me in. Now, hey buddy, just bring it down just a smidgen. Thank you. So when I see it starting to pull away, that's where I'm like, oh, all right, I got to jump on this. And so I have that chase instinct. So what I do is, as I see it starting to pull away, right? So let's just say, we kind of moved up a little bit, we sort of pulled back, and then we all of a sudden start to break away a little bit. That's where I'm watching this little micro pullback here to jump in just for that next leg higher. Because usually when they first start to pop, it's a couple of, maybe even one really big short seller who covered, and they kind of, with the market order, make that stock pop up. And then this is moment of truth. They do more shorts or, other shorts, or people take profit and it just comes all the way back down? Or is that the spark that ignites the next leg? And so my trigger is after the pullback. This is a micro pullback when it breaks the new high. So if we zoom in even closer on that, you have the first candle of that big spike, which is the short covering. And then typically you have, and this could be just momentary. This could be on a 10-second chart. So it pops, and let's just say this was up to a high of, $8, whole dollar, very common. It pulls back, down here to like 775. And then all of a sudden right here, it starts to surge higher up to 785, and I'm adding 795, I'm adding $8, I'm adding, and then 825, 850, and then we're looking at maybe a micro pullback at 850, and then a squeeze up to 9. And all of a sudden we've got $1 a share of profit. So for me, my instinct has always been pretty tuned to jumping on things that are moving, because I don't make money when stocks go sideways. So when I see something moving, I'm like, oh, here we go. This is what I want. The problem is that in a colder market, that'll bite me, because you'll get that pop and then that's it. So it's a lot of false starts. It's like it pops and then it just dies. It drops. And then it pops and then it drops. It pops and then it drops. And so you have to be really thoughtful about waiting for that micro pullback before pulling the trigger, especially in a colder market, because that micro pullback is the chance where it'll drop, right? It won't keep going higher. It'll just drop. In a super hot market, there are times where the pullback is so brief that some would say, I just basically got it instantly. Yeah, you can have that. You could split it. If you have that, yeah. Yeah. I think that would be okay. Yeah. So it's kind of like, lost my train of thought there a little bit. You interrupted me, by the way. So in a cold market, you need to wait for that micro pullback to be a little bit more defined before jumping in, because what'll happen is you'll get these drops. And in a hot market, some people will say, Ross, you just jumped in. I don't even see the pullback. And it might have been just a moment of pause on the level 2. And that was a chance where it could have died, and it didn't. And then that's where I jumped in. And so all this happens really quick, which is why it's great that you get to have my market commentary while I'm trading. So you're not trying to figure all this out completely by yourself, because I know it's a lot. But even for me, it's moving quickly, and articulating while trading. I mean, everything happens so fast with some of these stocks that it takes some time to kind of get yourself up to speed. So in this market right now, what I'm doing on these, so while some people are just taking an entry and just selling, I'm taking an entry, I'm taking some profit, and that right there, because you see that topping tail there, what that tells us is that actually was a micro pullback. So let's look at that. This is a 5-minute chart. So it hit a high of 958 on that candle right there. I know that because I'm looking at the high of this right there. So that was 958. All right, so 958. So now let's pull this back for a second, and let's jump on the 1-minute chart. So we're going to look at 958. We're going to get zoomed in, and we're going to try to see what happened there. So, so let me just see. So this was right at 7 a.m. Okay. So 7 a.m., it pulls up. Yep, there it is, right. Yep, so you actually got two. This is the one that we were seeing on that candle. So it hit a high of 958 right here. It pulled back down to 930, and then it punches up to 10. Breaks 10, goes to 1040. And then all the way to 11, right? That's the candle that you love. That's an awesome candle. That in one candle with 10,000 shares, that's like a $12,000 winner. That's awesome. So that's beautiful. So my first entry was down here at 825. And I got in kind of at a breakout spot, which was the break of this little pivot. So again, stair stepping up, and then it taps 9, pulls back. That's a micro pullback for an entry. Taps 958, micro pullback for an entry. Taps 10, micro pullback for an entry. Taps 1050, micro pullback for an entry. So I'm trading it all the way up here. And as it breaks 11, you get that nice pop, and then you get a bigger pullback. All right, so now we're dipping down a little bit more. All right, so now at this point, we're starting to watch the 5-minute chart, right? So the 5-minute chart, we've pulled back quite a bit. So now the 5-minute chart is setting up a bull flag. So now you zoom in on the 5-minute chart. And I wasn't intending to do another kind of recap of Friday's trades, but just to show you, it pulls back and then it pulls away. And then you get that whole next leg higher. So I'm excited. I mean, it's always exciting to have a really big green week. For me, all of this, I trade in a retirement account. So this is tax-free. So I have zero income tax on my trading profits from last year. I'll have zero income tax on the trading profits from this year. I'm just trading in this account. I'm putting away money for retirement for later. I've got my royalties from my book, How to Day Trade, The Plain Truth, which of course you guys could check out. It sells on Amazon. It's a bestseller. And, I make money from having the software sales at Warrior Trading and things like that. So, but my trading, I keep that all in a retirement account. And that is something that I think everyone should do. Everyone should set up a Roth IRA and start trading in it, because any profit that you make is a gift to yourself for the future. Even if it's only a little bit, it's a gift for the future. And there's not much else you can do where you can, I don't know of another way you could grow a retirement account as fast as with trading. I mean, really, like the people that have made big money in retirement accounts to the tune of billions of dollars, they did it by, being like a early investor in some startup. But 99% of us we're not in the circle to be able to do that. The guy, Peter Thiel, who invested in PayPal, and his Roth IRA is worth like $4 billion or something crazy like that. Yeah. I don't know people that are. Thank you for finding that. That was a really good discovery. So, good job. Okay, thank you. So, for the rest of us who don't have friends that are, creating Facebook or PayPal, how else do you grow a retirement account? Well, your max contribution is $6,000, $7,000 a year for a Roth IRA. So $7,000 a year times 10 years, $70,000, and it grows, interest, everything else, your compound interest, right? And that's it. It takes a long time to grow that account. Or, you're actively trading in it. And so all the time you're spending actively trading in it, you grow, you do, 3 contributions of 7,000, you grow it up to 20 grand, and you're just trading in it. That's what I did. I did 3 contributions of 6,000, $18,000, and my Roth IRA now is over $8 million in it. And I'm just starting. I'm not stopping, right? It's growing that account, tax free. So anyways, I got to let you guys go. Thank you for tuning in today for this episode. I hope to see you tomorrow morning, bright and early, during my live broadcast. Check out the 2-week trial. It's $20. I'll remind you, as always, my results aren't typical. I've been doing this for a long time. So please manage your risk, take it slow, and always practice these new strategies in a simulator before you put real money on the line. All right, see you guys soon.